The market's been in our favor, especially in Florida right now, with everybody migrating to Florida. We've seen our rents go, even in our C class, in the vicinity up of like 20% in the last 3 years.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, with a special South African guest.
Two special ones today.
No, there's only one.
One isn't special. I'm not special.
This is the South African special show today. We'll be talking about South Africans in Florida, one who's been very successful and one who aspires to be as successful, right?
Well, today's guests, we're real estate brokers, and so we get calls every day. We're out trying to help people sell their properties, to lease their properties, and to acquire properties. And people coming from outside often complain how difficult it is to find investments in this hot market. And today we'll speak to a smart investor who, of course, he's smart. He's from South Africa, and he'll tell us a little bit about what they're doing. And he's doing a great job with his team in building his investment portfolio.
Yeah, it always impresses me. And Vehano, our guest that's coming up, he's a young guy, certainly young compared to us, Steven, and he has found success. And it's always fascinating to me. It's hard enough for folks, that live here, been here for a while, understand the highways to move around to be successful. And when you see someone coming in from out of the country to do it, it really is an eye-opener and inspiring, I think. And so we're looking forward to hearing about him. He's doing some multifamily investing. He's doing it in the Southeast, mostly in Florida, but he has stuff scattered all over the Southeast. So we're looking forward to talking to him a little bit about that. Also wanted to shout out to Sudoku, #1 fan. He left a review for us and much appreciated. He says, "This is a great show. I picked up many tips and have concluded a few business deals after listening to some guests on this show." That's really terrific stuff. Sudoku, we really appreciate you taking the time to complete that review. And if you haven't done so already, if you could go to the Google App Store and leave us a review to the podcast section and leave us a review. It's very helpful. It allows potential guests, to look to see what our listeners are saying. And for anybody that's going to come onto the show, it's an investment of their time. And when they see you guys leaving these types of reviews, it really helps us to do some programming. So again, we thank you very much for leaving that review, and please go there if you've not done so already. It does help us with programming. Steven, anything else we want to talk about before we get rolling?
Let's roll into the show and see how South Africans do it. Today we have with us Vehano Joseph. Vehano is the Chief Executive Officer and co-founder of Dreamstone Investments, a rapidly growing multifamily investment firm with bases in Atlanta and Tampa. Vehano and his team specialize in adding value to properties by putting the Dreamstone touch on unit interiors and exteriors, adding functional and aesthetic features that ensure value for investors, while also creating appealing, affordable, family-friendly spaces that attract residents over time. They have over $75 million assets under management and a track record of raising and stabilizing occupancy to greater than 90%. Dreamstone does its own property management. Prior to launching Dreamstone, Vehano was a chartered accountant from South Africa. He brings his financial acumen and a highly methodical, analytical approach to each project, helping to ensure the Dreamstone portfolio delivers sustained value for investors. Vehano, welcome to the Invest Florida show.
Thank you, Steven, for having me.
Vehano, I really appreciate you coming on and talking to us. But I got to admit, I feel a little bit like an outsider right now.
Certainly.
Well,
it's always good to meet South Africans in the same field. It's awesome.
We'll teach him today how to speak.
Well, I was just going to say, if this interview switches over to Afrikaans, I'm turning it off. So we know in advance.
Good, because my Afrikaans is not that good anymore.
Stephen mumbles under his breath. I'm sure it's cuss words at me have been Afrikaans. So
I sent you an email in Afrikaans. Did you get it?
I did. I can still read Afrikaans. My mother would be glad to know that.
So tell us. I mean, you've got an interesting backstory. How you ended up in the U.S. and how you ended up doing this type of real estate.
Yeah. So, a little bit about me. So I'm originally from Cape Town, South Africa. I qualified as a chartered accountant and worked with Grant Thornton internationally for 7 years. I did a 18-month secondment up in Fort Lauderdale, Florida, which was supposed to be 18 months. I ended up staying for a little bit longer than that. And, 6 months into it, the firm offered me, my green card. And, I was 25 at the time. And I said, let's go for it. And I worked in management consulting after that. I worked with a firm out of Delaware that are based in Miami. I did pretty large M&A type transactions with Wells Fargo up in Charlotte, Silicon Valley Bank in San Jose. I did a $3 billion acquisition for Johnson & Johnson in Tampa. And, I was the director of acquisitions for a private equity-backed OBGYN practice where we were doing 60 plus acquisitions of practices, mom and pop practices a month. So I know what a war room looks like and due diligence checklists, certainly from my accounting background. I quickly learned that being in America, that, you, or with any country, your career kind of takes all your time. And, there's an exchange that happens there, for money. And I, like with everybody, read Rich Dad, Poor Dad, and figured out that, the 401k path is not the right path for me. And, started out, I didn't know what I was going to do, but just like most investors, I'm sure. And I did not, growing up in South Africa, real estate investing isn't really like a known thing, at least not in my circles. And we, just typically you buy your house and maybe a holiday house, and that's kind of it. That's where it stops. But, understanding the value in your retirement and kind of wealth creation, it's an interesting phenomena here in America where you can buy, entire complex. And, multifamily became a very appealing asset to me because of kind of the risk adverseness of it. I was very, I always looked at every investment from a risk perspective and, what mitigants do we have from that risk perspective? And multifamily, I always looked at, okay, if you have more than one tenant, if one moves out, you're still fine. So that's kind of my journey into real estate. And we started with a duplex in Tampa. Crazy story. I've got to give my wife credit for this. I had been on the road consulting and had amassed a nice little savings account and realized I was going to buy actually a convertible Mercedes sports car. And
not exactly an investment, huh?
No. At the time, my wife was like, that maybe we should invest that. And I was like, you're right. And, I got to give her credit. And we bought a duplex and we did some repairs in Tampa. I bought a duplex in Tampa. It took me a few months to really lean in and fully understand real estate. And I kind of became a student and still am a student of it, love it, and went into a duplex. And, we still own it today. We did some fairly decent repairs and the tenant never left. So I moved the rent from $750 to $1,300. They were not taken care of. And they were happy, and that's it. So the bug bit, and I realized, okay, I can do this, and realized pretty quickly we're gonna, you start running out of your own money pretty quickly in this sport, and And then, I met my business partner, Nick Contessa, who's out in Tampa. He's actually living out there. And we formed a company. And, I always had the intention of creating a company. And this was over 3 years ago. And we ended up forming Dreamstone Investments. We went from a duplex, a 7-unit, a 14-unit, 56-unit, 90-unit, 101 unit in Atlanta, 56-unit in Tampa again. And then last year we did a 19 townhome community built to rent product just to prove out the thesis.
Wow.
And so what do you look for when you're looking for a property to acquire?
Yeah, so that has evolved over the last few years. Certainly, Corona last year, it's probably given me about 25 years worth of experience just going through that. It was definitely interesting time period, and you really start to reevaluate your asset base. So, going through the ABCDs of real estate, we've traditionally started with C class, maybe C plus, and B minus assets. And, as we matured in our investing strategy, we've, graduated up to more B class, A minus, A class properties. Reason being is just the ease of dealing with the types of residents and the longevity. It certainly is a different, aspect when it comes to asset management and property management. What we look for is a value add strategy, or some sort of component where we can, increase the performance of the asset. You'd be surprised sometimes it may not be ripping out the whole, kitchen or whatever, or rehabbing the whole entire property. It may just be something as simple as adding an amenity, adding the right staff so that the work orders are completed. And slowly but surely the market's been in our favor, especially in Florida right now, with everybody migrating to Florida. We've seen our rents go, even in our C class, in the vicinity up of like 20% in the last 3 years.
Wow.
It's been staggering.
That's significant.
Wow.
Yeah.
So you're all over the Southeast, or just Florida and
Correct.
Georgia?
So we're in Tampa, we're in Atlanta, and we're in Nashville. We are working also on a project in Dallas and Houston currently. So Southeast predominantly, Sunshine, Beltline.
So how do you see the Florida market now relative to the other markets?
Yeah, and are you looking at other markets inside of Florida? Kind of give us your overall impression of Florida and like what you like and don't like, areas you like and don't like.
Yeah, so having predominantly lived in Florida throughout my initial career in accounting and consulting, I was predominantly on the East Coast of Florida, and being out in Fort Lauderdale, Miami, those asset classes are a little bit different, more institutional players in that space. So Tampa and the west coast of Florida became much more appealing because you could still find bang for your buck, which certainly is changing these days. But the migration patterns are key to any investment. You want to go where the population is growing, where, the average net income, net worth, and median income of a family is growing, and the jobs are growing in that area. So Florida has been incredible for that. And it continues to be either a second home or a new home for the folks moving from the West Coast and moving from the Northeast. What's funny, we're seeing this phenomena in every market that we're in. Our build to rent product up in Nashville, I mean, every third call was from somebody that was relocating from somewhere else.
Yeah, well, you're the front line when you start doing those kind of developments. And, in Florida now, it's over 1,000 people a day. So I think it's happening in some of the other areas also that you're talking about.
Actually, I think it's even more than that now. But in Tampa, it's almost that much now. Tampa's just been booming over last year.
Booming. Yes, sir.
Yeah.
Well, all you have to do is win a few Super Bowls and Stanley Cups, and it does wonders for you.
It certainly does. It's a fantastic market. I mean, we're actually exiting one of our first syndications right now. We went in at 64 a door and we're exiting at 115 a door.
Wow.
Which is in 18 months is a fantastic return to my investors. But this, I absolutely have to say that we put a considerable amount of work into this project. It was new roofs, like exterior painting, paving, a lot of repairs, a lot of plumbing issues were taken care of. So, I think the next owners are going to, enjoy that property quite nicely. Yeah.
Talk to us a little bit about, are you looking at other areas in the state, Orlando, South Florida, Panhandle? What are you thinking about these areas?
Panhandle is my next target. We're looking aggressively in the Fort Walton kind of area, very appealing market. What we kind of stumbled into by chance was our 56 unit that we purchased in Apollo Beach. 5 boat docks, 2 swimming pools, beautiful property, A-class, and A-class tenants. So, it's an older property, but it's just fantastically maintained, and the renovation plan that we've put in there. The tenant base, just by that very nature, have been a little, older than the typical tenant base that we've been used to, and they've just been fantastic performers. So there's a pretty large migration of folks moving to the Panhandle to retire or come, downsize type of thing. A lot of people are going out there, and I think that's it's a market that it first of all, it's kind of hard to get into, but also, once you're in there, I don't think you want to get out there too quickly.
So, Vehano, give me an idea when this is a crazy market to acquire properties with cap rates so low, and so you go in and you look for something where you see the value add. What kind of cap rates are you seeing that enable you to acquire properties now? Because even if you're doing value add, the cap rates are lower than we've seen in the past.
Oh yeah, and I'm seeing, Stephen, you hit the nail on the head. A lot of those properties today, especially in the C-class space, are at incredibly low cap rates. I'm seeing like 4.5, 5, which traditionally have obviously, as you guys would know, have been trading much higher than that. And then the premium on the A class, yeah. So I've seen 3.5. And these are secondary, tertiary markets, not your core New York type of things. We're in like Atlanta, Tampa. We're seeing sub 4 caps, which at some point you have to evaluate the risk and understand what that looks like on the exit. So we've been trying to educate our investors that yes, it's a lower cap rate, there is some value add. However, our risk profile in this tenant base is going to be a more secure asset in the long run versus something, maybe in a C class or that. So that's kind of, we've had to readjust the way we look at assets, and also look at what that risk profile looks like to our investors. So when we do go in a downturn and 20% haircut on rental rates, can you sustain that? And, that goes into your underwriting, your due diligence. You can still find a deal out there today. It's just, you got to get, cross your T's and dot your I's several times.
Talk to us a little about raising money for these deals. You started in the real estate business with a duplex in Tampa, and now you're you're doing developments and buying multifamily. You mentioned that you're going out and you're finding money and returning money to investors. Talk to us a little bit about the syndications and how you're finding your investors and how that's working for you, and maybe some tips of people who might be interested in doing some syndication, like maybe give them one idea of don't do this. We did it and that was terrible.
Yeah. So in the money raising front, it all starts with friends and family, and having moved here by myself. I have a limited family resources in America. So really it becomes friends. One thing I learned from another fairly successful syndicator is, you just got to tell everybody that you're doing this. Obviously, don't tell your boss if you're doing this part time, but maybe if you have a good relationship, they may be an investor in the future. But one thing that I've learned, and my word of advice is, it's not a soft commitment is not a real commitment until that wire hits your bank account.
Oh, yeah.
So always raise more than you can imagine, because in the beginning it was it was tough. Yeah, it was tough. You had to. I've sent out OMs to a bunch of people, explain to people, if I had this kind of deal, would you be interested? And like, yeah, sure, but when you send it out, crickets. So
I know how that works.
Now things are a little bit easier, and our institutional platform really makes it appealing for someone to do larger capital contributions.
Wait. When you say institutional platform, you mean your institutional platform, your investor platform? Okay, because you've got a track record now, which has allowed people to feel more confident investing in you, because you're doing things like buying at 60 and selling at 120 a door, and people are excited about getting on board.
Right. Right.
And where do your investors come from? Are they, are you bringing in people from other countries, or is it from mostly from the United States?
Mostly from the United States thus far. We have a few from the UK, but not many. Mostly it's really people in our network, people that we've networked with. We've in the beginning, we went out to other investor groups and grouped up together and that kind of thing, did some JVs that way. And surprisingly, a lot of those investors become repeat investors, it's kind of how this thing goes. And, now we're always raising capital, because you never know when the next deal comes along. We're also, like I mentioned, with the institutional platform, we're raising capital from the larger, funds and funds of funds types of things.
Talk a little bit about the property management. Are you guys handling that independently, or are you farming that out?
Yes, we are handling that independently. So because of my background in M&A, last year when March hit and everything kind of slowed down to a screeching halt, my business partner Nick was he was telling me, what do we do? So we basically, everyone meeting every day and kind of brainstorming what was going on, and we started looking at businesses to acquire. We ended up acquiring a legal services company. And then we went in there, took it from 40-year-old company with like no systems to putting in high-tech new systems, automating a lot of the stuff, and it's off to the races now. And then we acquired a property management company that was a part of a divestiture. And we've gone in and, we've almost doubled the unit count there in the last 3 months. So, to give us the vertical integration that we need. And so bringing on that staff, the key staff, and the systems and processes has been really, really exciting, and something that I was going to start anyway. So I figured, well, why not buy the book of business and build that platform and improve on it, because there were so many things we've improved on. So
So going forward, is your strategy to go? Will you look to be in more urban type environments, or will you go, like, as the market gets tougher, to go out a little bit more into the suburbs? What are your thoughts on that area?
Yeah. So I love the suburban pockets. Those are kind of exciting. Just outside of the city, but close enough to the city that it has its Whole Foods or Target, Home Depot. Those kind of like mall setups with apartments close by. Those are really successful for us, and we like those. That's almost an amenity in itself. And then we are looking at. We're actually in the process of acquiring a high rise in Atlanta, and it's a completely different model than your normal traditional garden style apartment. I think where we're seeing the stuff inside the perimeter or in town, you're getting a much higher yield than you would, for example, in a C class or a garden style complex. So, we're doing a balance of both, because I don't think you can just pigeonhole yourself into just one type of asset, because they all have their pros and cons, right? And you've got to have a balanced portfolio to create a balanced platform.
So when your investors come in, are they investing in the portfolio, or are they investing in individual assets?
In individual assets, thus far, we're starting a fund probably in the next year or so, and I just find it a little easier when you can act quickly. The markets become incredibly competitive, as you guys know. So, being able to go out and close quickly, have that ability is really key. Because we are finding some really good off-market opportunities that in the areas that we've done a deep dive analytical review to see the population migrations, etc. And being able to act on that fairly quickly is key. So I can see us evolving in the next year to having that Fund One platform available.
So it sounds like you're sort of on your own out there trying to dig to find deals. Are you utilizing brokers, or are you doing most of this yourself by sort of laser focusing on a handful of assets in a market?
Oh, absolutely, using brokers. I mean, brokers give us looks all the time before the rest of the market. Obviously, most brokers have their select few sponsors that they know can close, and they'll present deals to before other sponsors. So we utilize brokers, we utilize property managers, we utilize people in our network. So we've had people reach out to us to sell us a deal. We've had wholesalers reach out to us and sell us a deal. So you have to keep all avenues open, to find the right deal.
So we get telephone calls, Stephen and I, literally every day, and folks will call us and they'll go, "We're looking for multifamily."
Yes.
And for us as brokers, I mean, we did a lot of multifamily in a brief window from like 2012 to 2017, and it got more and more challenging. And we have other asset classes. We just figured, hey, this is getting to be really challenging, and we started doing less of it. But for us, it's sort of our eyes just sort of roll behind our heads. Someone says, "Oh, I'm looking for multifamily," and you ask the question, "Okay,
yeah, I'm moving from New York and I want to buy a 60-unit." complex.
Yeah, and then you ask them where, they don't really have an idea, and you ask them if they've got financing, and I've got money. How much money do you have? Well, I don't want to disclose that. I mean, that I'm sorry if you're listening to this and you're offended by it, but I will never call you back again. There's too much that we don't have enough hours in the day. But I want to hear from you what you've done and how you explain yourself, because this is very important. And I tell our listeners all the time how you talk to brokers if you want to get in. Why don't you tell a little bit about what you've been doing to try to get brokers to pay attention to you and get those first looks? You say you're capable of closing, but how do you convince somebody? It's sort of a chicken and the egg, right? So why don't you talk about how you will introduce yourself to make sure you're getting moved to the top of the stack?
Yeah. So in the beginning, it was all about creating rapport with that broker, understanding who you're talking to. I think I probably have a knack for that, from my past life of being in auditing and consulting, being able to talk to, CEOs, CFOs, that type of thing. But, actually knowing what you're talking about, do your homework, understand, listen to podcasts like this, ask the right questions. And those questions are things that evolve over time. Stephen, Eric, I don't think there's a perfect script. I think there's a level. You have to be able to demonstrate a level of understanding and a level of sophistication, to these brokers. And that may be like, hey, I know I'm new to this market. I have a group of investors. We've qualified for X amount, and we've been talking to lenders. We pre-approved or whatever, and we're looking to close aggressively. These are the terms that we're looking for, and the broker may listen to you. You probably won't, Next best thing is take them out for coffee. Now that we can do that again, lunch, if you can, break bread with these folks. It's important to build that relationship, because you may not get it in this first deal, maybe not in the second deal, but maybe the third or fourth, they will reach out to you again. Another tip that I have for the listeners is when you see a listing go under contract, follow up a month later and see that list, what happened to that deal. That broker will respect you for following up, asking. It gets you top of mind, right? So you want to continuously build that relationship with them. So does that answer your question?
Yeah, no, and it does. I mean, it really comes down to relationship and trust building. It's the same thing that brokers have to go through. It's interesting for us. I mean, we hear from all the time about just people just bashing brokers about they never called me back. They never did. And I don't want to really apologize for them, but I do want to kind of explain that brokers they only get paid when a deal gets done. And if they sniff any hesitancy, anybody who's perhaps not done their homework, somebody who's not ready to go. I literally have 3,000 people in a database looking for multifamily, literally. Now, I can tell you that 2,987 of those have limited capacity to complete a transaction, limited. And so I've got to sift through that.
Well, I mean, they call them tire kickers, Eric. I mean, it's just, and time is money, and there are a lot more tire kickers out there than there are people who have the capacity to execute.
Well, it's not just tire kickers. You'll have somebody who's got $1 million, but they're wanting to buy a $15 million apartment complex, and they need funds. They don't really understand how to get there, and they're saying, "Well, I'm going to raise money." Have you done this before? That's my next question. What experience do you have in SEC filings? Well, I don't have any. Well, why don't you? I can recommend somebody to you. Why don't you talk to that person? Well, my brother's, an attorney, and has he done that before? Well, no, but he's an attorney. He has friends. See, these types of interactions, it's sort of like this guy's really not prepared, and when the competition is so stiff. We can't waste time on someone who's not prepared and ready to go. So it's a filtering process for all brokers of like who's real, who's not. And so what you're saying is that nobody's going to trust you on the first telephone call. It's the same thing when a broker calls a potential seller. No one's going to trust you on that first telephone call. There's this trust building component to it. So brokers get a bad reputation. A lot of it's deserved, and some of it is maybe it's on the investor. They're just not ready yet, and so the broker's not going to pay a lot of attention to them.
Yeah, and just to add to that, I mean, look, I have brokers in Tampa that, I call them my friends. They are my friends. I've literally, spent hours and hours. Whenever I'm down in Tampa, we'll go grab a bite or go out for dinner. It's important because these are the guys that are, we're helping each other. I realized to my, the other day that I'm going to know this broker for the rest of my life. So it's important to build a relationship of trust and build that rapport. If you intend on developing a business and a company out of this, I couldn't agree more. It's a trust exercise.
Absolutely. So Vehano, if people want to contact you or they have some properties that might be of interest to you, how can they reach you?
Yeah, so you can reach me on my website. It's www.dreamstoneinvest.com, or you can send an email to info@dreamstoneinvest.com, or check out our Facebook, our LinkedIn, or Instagram.
Awesome. Vehano, really appreciate your time and your insight. Very valuable. It's interesting. I really enjoy your story. I always enjoy folks coming from other places and being successful here. It's hard enough, folks, who already understand the landscape in the United States to be able to be successful. And it's so much more, it's even more impressive for me, somebody who's coming from outside, who's trying to learn the ins and the outs, and then to be successful on top of that. So these stories I really enjoy and I appreciate.
Give me a break. He's from South Africa. Of course he's going to be successful.
Well, my experience with South Africans is not particularly good. So it makes it even more impressive for me, Stephen, is what I'm trying to say.
Well, I really appreciate that, Eric. You flatter me.
Well, you don't realize the South African bar is not very high for me. So just so you know.
Yeah. Well, I will say this. It's not just me. It's my team. Build a team. This is a team sport. Enjoy what you do. This is every day, man. I love it. I love the team. I love this. I love the real estate vehicle. And then I think, it's an awesome thing to do with your life, right? Really.
Awesome.
Better than sitting in a cubicle, I'll tell you that.
Yeah.
All right, Vehano. We really appreciate it. And we hope you have a great day.
Thank you. You too.
And that was Vehano Joseph talking multifamily investment. Interesting story, Stephen. What were your thoughts?
So Vehano's a really smart guy, and the interesting part about the story is everybody's concerned that you can't get your investment returns anymore on multifamily because the cap rates are so low. But if you really do your homework and find those areas of upside, there's still opportunities, and Vehano's proving that.
Yeah, and it's interesting. I thought him moving into the panhandle of Fort Walton specifically, I thought was interesting. Listen, the multifamily market's hot everywhere, but Tampa's hotter than a pistol. Central Florida along the I-4 corridor is insane. It's trying to find deals is increasingly challenging with large pools, multiple offers on every deal that comes to the table. It's not easy. It's not for the faint of heart, but it seems like he's finding ways to be able to swim in different bodies of water, doesn't it, Stephen? I mean, it seems like, he's doing some development and he's moving into some smaller markets that showing promise.
And higher, moving out of Class C into higher class is just diversifying.
Yeah. And, I understand why he likes the Fort Walton beach market. I mean, it's a lot of that in there between Pensacola, Fort Walton. There's a lot of military up there, and there's a lot of transient population coming from up north, and it is the redneck Riviera, is it not?
Well, you would know, right?
Yeah, I mean, it's a beautiful area. So the beaches are popular, and it has other drivers besides just the beaches. So we understand why he's moving there,
and it hasn't suffered the same amount, the same volume of people coming down. It's still relatively undiscovered.
Yeah. So you're not getting the 50 offers on the first day a property comes to the market.
You'll
like
get
you
10.
are. You get 10. Well, he was a great guest. Stephen, what can they do to find other great guests like Vehano?
So the place to go is to our archives. Visit www.investfloridashow.com and stay current. Listen to the podcast while you're on the move and download the app and listen on your mobile phone.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.